Hello, welcome to another overview for Bitcoin price technical analysis using Elliott wave theory with me, Nnael. So let's continue from our last video, last Saturday I think. How's your weekend, by the way? Hope it's a good weekend. So yeah, it's now we are in 1 hour time frame. As you can see here, I still haven't made any change for it. So we are going to take a look for a few possibilities of the movement for Bitcoin price, but where will it be going, whether it's going up or going low. So yesterday, Sunday, I'm not I didn't upload any video because that's Sunday, and usually in weekend the market should close, but there is no closed market for cryptocurrency. So yeah, let's continue. So in my last video I told you that if the price here break this parallel channel, whether it's breaking up or it's breaking down, it will be going up further or it will be going down further. But in my assumption here that the price actually breaking up this parallel channel, and as by looking at this price movement, I think it's just go another correction, and yeah, we actually have this correction, but my target here in the third sub microwave did not complete, so I'm assuming that this is no longer valid, so I'm going to remove it. And now we are going to calculate this movement down. I'm assuming that this is an ABC correction, ABC, and this is another minuscule impulse to minuscule 5-wave impulsive 5-wave movement. So another ABC correction and another minuscule impulsive move. And now I think we are in an ABC correction for this first sub 1-2 setup wave here for this first wave. So let's calculate it. So first I'm going to assume that this is not the we are in the bull case scenario first, so I am assuming that this is the first wave here and the first sub microwave, and this is the no, wait a minute, let me count it first from using this Fibonacci trend line from the last low to this. So it traveled to 0.618 Fibonacci resistance, which is the ideal target for it. So actually be around 27k, 1618 Fibonacci retracement here. So it's not even moved close to it, so I'm assuming that it's actually a little bit tricky for this wave here to count, because it's forming a, what you call it, a triple top formation. 1, 2, 3. This is a triple top formation, so it's easy to assume that the price will drop from this price here. But in Elliott wave, in Elliott wave, there is no such thing as triple top or double top, or triple bottom or double top. I don't think that there's the thing in Elliott wave, so it's a little bit tricky to calculate, and I just able to assume that this is the first micro impulsive wave here, and we have a minuscule impulsive wave. So we are now going to the second micro impulsive wave. With that being said, I'm going to assume that we are still in our direction to the third wave here, or maybe even this is the first wave here. The first micro impulsive wave here has not been completed yet, so I need a little time for it to work, to be in play, because considering that this is an ABC correction, we still have an A here and maybe a B right here, and we are now missing the C, so I'm assuming that the price will be dropped a little bit further down because we still lost the C. We need the C, but if we assume that this is the C wave here, A, B, C, and this is the C, it's a higher C. Sometimes it's able to be in play like that, but it's just not really makes sense. So I'm just going to move this, all of this here, and so we're still in in our direction to this first what you call it, a minute impulsive wave, the fifth wave for this minute impulsive wave to the first impulsive movement. Oh, this is the bull case scenario, so yeah, here we are. So assuming that this has not been complete yet, and this also has not been complete yet, and the third wave also has not been complete yet, we are still in this sub microwave. So I'm going to first add this what you call it, a minuscule impulsive movement. This is the third, this is the fourth, and this is the 5. So change the color for minuscule impulsive wave. Yeah, so we have a complete 5 wave to the upside, assuming that this is the third, this is the 4 here. Yeah, I'm assuming that this is the 4 here and this is the 5 here, and we have a minuscule ABC correction here, and ABC, this is also a minuscule ABC. This using white and not this white, I mean this white here. This is a minuscule ABC correction here, and we have another impulsive movement, impulsive minuscule movement up. So I can assume that this is, it's a little bit, really a little bit tricky to count here, but yeah, I'm just going to assume that this is a 1-2 setup, a minuscule 1-2 setup here. So let's just add the first one here and the second one here with minuscule ABC. This is the second one, and another minuscule ABC correction here, an A here, a B here, and a C here. So, and we all set now, and we have this, I'm assuming that we have another minuscule impulsive move down from this to this. This is a fifth wave complete if we count it maybe in 5 minutes time frame here. Let's see. So this is the C, we have a 1 here, we have a 1 here, a 2, a 3, 4, 5. Yeah, it's a complete minuscule impulsive move, but I'm not going to add it since it's just too tight, you know, the price that's now we are having a sub micro ABC correction down here, and A, B, and C. Let's calculate the C. How far will the C be? The sub micro, this is the sub micro correction. This is an A here, and a B here, and a C here. So as you already know, how I'm going to calculate this is from this high here, the price traveled down to the A wave here, and we are counting the B wave here. So maybe the C wave will be somewhere around 0.382 Fibonacci retracement or 0.618 Fibonacci retracement. So guessing with that being said, I can put that I can put the second wave here. Yeah, because it's a 1-2 setup, so I am able to put the second wave here and the C wave around here. So yeah. In this bull case scenario, we will still be having an upside movement, so waiting for the FOMC also. We will be having FOMC this Thursday, here. Yeah, this Tuesday this week. Let's see what will happen for the market after the FOMC release. So right now it's a little bit tricky because I cannot really count the wave here because it's just it's a little bit tricky. It's not it really outside of my perspective, since my target did not reach and the price also did not drop. So, and we have a triple top, maybe not just a triple top, we have this higher top, but this is a triple top, 1 2 3 here, and including this we also have another triple top. So let's just draw another line here, another trend line here, since this is a higher top here. So this is the resistance that the Bitcoin need to break, if assuming that we still have this fifth wave here to complete. And I think I can also assume that wait, let's just put all of this here first. I think I can also assuming that I'm going to remove this first, that maybe this what you call it again, this minor impulsive wave, the third wave of this minor impulsive wave has not been complete yet. So I'm guessing that the four also not been completed, and we're still in our direction to complete this third wave here. So yeah, by looking for this movement here, I can assume that it's nothing changed. The bull case scenario here, nothing changed with for the bull case scenario here. It's still valid, and we are still able to work. Yeah, it's still able to continue to be in play. Yeah, or whatever it is. Okay, so yeah, that's all I have in mind. And we also have this trend line here. I can draw another trend line from this low here to this high. Yeah, so assuming that it will break, so I should have just draw a low yesterday right here. It's breaking, so and I draw another, so that's not valid anymore, so I just will draw another trend line here. This is a valid movement from this low here. Yeah, it's a valid trend line, so I can draw it like this, something like this. Let's make it a little longer. No, it's not valid because it connects to nowhere. Maybe it's just too far away from this one to set up here. This is the first one to set up, so I'm assuming that around August 17, yeah, at 7 p.m. UTC plus 7 might be, yeah, considering that we will be having an FOMC and initial jobless claim that will make a high volatility to the market. So let's just wait. But I'm going to count this first from this side to this side. We're still missing a C after all, but maybe if we lost the C here, we might be able to going up further, since this to reach this new height here as our setup, since considering that this is a minuscule impulsive move to the downside. So with that being said, it can work like that. I think it's just too, you know what, it's just too tricky to calculate this, how far they already dropped. 1618, yeah, 23.7. It also can be this also can be our target to this positive move down to finish. So this is we have a 1 2 3 4 5, something like that. and we are going up. Yeah, okay, now let's go to the bear case scenario. In the bear case scenario here, this is my target, also not reach, so we don't need this anymore. I'm just going to remove it, and we are this also not valid as a one, the first one to set up, so I'm this wave here, I'm going to remove it. So considering here we have a higher height than this height, so I'm going to move the WXY correction right here to this. Yeah, and the fourth wave of the impulsive 5 wave down also to this. This is the primary, is it? Oh, it's minor impulsive wave, so the minor impulsive wave so yeah, something like this. So we have an extended ABC with WXY inside a WXY, and maybe another WXY X here, A B A here, A B C here, no, XY A here, and we have an impulsive move, and so this I can count it A B C. So this is about A B C, I think, since this is a higher height. So I'm able to consider it something like this. So we are we might not need this anymore, because this is WXY to the Y here, and this is an X here, and we have an ABC with what you call it, a 1 2 setup, 1 2. I don't know how to call it. So let's just assume that this is an ABC from this high here, this is an A here, and this is, oh sorry, I mean from this low, this is an A here, or here, this is an A, this is AB, and this is AC. So we have this ABC set up here, and this is a what you call it, a minuscule, a subminuet. Is it a subminuet? Yeah, because it's a big movement. Is it a big movement? It just takes a long time. Yep. Okay, so that's what we have, and from this point we have. So yeah, if I'm going to count it like this. So we don't need this anymore. So I'm going to remove this, I think, and change it to WXYZ pattern here, something like that maybe. So let's take a look here. Yeah, this WXY here, we use WXYZ from this 700 low W. We have an ABC to Y here, ABC inside an AB inside a WXY double ABC. So WXY here and ABC and ABC. Can I put this Y? This is a WXY here in W, and X in X, and Z in Z. So yeah. Okay, now let's count how far can we go, I think. So let's go to the daily time frame first. Okay, now assuming that we have this, so from this high, oh sorry, I mean from this, we have a 1 sequence take around this 9k, as I already marked it here, around 8800. So I calculated from this high here to this low, maybe somewhere around here. Yep, to another high here, and we have 10k. Yeah, this will be the target for a the bear case scenario here in order to complete this 5-wave impulsive move down. 1 2 3 4 5 here. So yeah, based on this Fibonacci resistance, I am assuming that the calculation for the wave here is valid, and yeah, assuming with that being said, we have now we have an ABC correction. This is not a micro, but an a minor, not a minor, a minute. See, ABC is a minute impulsive wave here. So we have a Z here complete. Considering that I'm also considering that I have a so the X, where the X, A, B, C, the X is here. The X is right there, since let's see. Where the X is right here. We have a sub Y here, Y inside a Y. And Y here, and X here, W, X, Y, X, Z. For considering that we have an impulsive move down, so I can assume it like this. And the Y here, so yeah, we have a W, X, Y, X, Z pattern to the B here, to the fifth wave of the impulsive move down. So yeah, something like A around here, and we have W, X, Y here, the first X around here, move it down. Wait, let me pull the dot first. Pull the dot. Is that a correct answer? Is that a correct word? I can't even say it's not a correct word, something. And we have the W around here. Yeah, so W, X, Y, X, Z from W, X, Y, X, Z. Yep, something like that. Let's put this to this bear case scenario. Wait, this is a double X, Y, X, Z. I'm going to put the double X, Y, X, Z in 4-hour time frame, and this A, B, C in the 1-hour time frame. So yeah, now what we have, an impulsive. I'm assuming that this is an impulsive move down. 1 2 3 4 5 a sub micro impulsive move down to complete the first wave here. So what's this again? Oh, this is just a takes. Oh, what's this again? An impulse amino impulsive wave. So why we have a second amino impulsive wave? Oh, I'm assuming that the first wave, yeah, the first wave around there. So let's calculate it. So from this high here to this low here, we are going to the first sub microwave here. So considering that this is already done, we will be having an ABC correction here. Maybe something like this if you want to. No, so oops, sorry, not like that. Something like this. This is an A, B, and C. So let's calculate how far will it go. So from this height to this height, we have 382. So the second wave might be somewhere around here, between 382 to 618. So oops, yeah, wait, I just removed it. This is the first one, this is the second one around here, from 382 to 0.618, and the second one, the fourth one, and the fifth one. And let's calculate the what you call it again? The Fibonacci, the retracement. Oh my god, I'm so bad in English. Yeah, so the second one will be somewhere around here, if considering that this is going up. Yeah. Remember, this is just a minuscule wave for to complete the first sub microwave for the minuet too. Well, yeah, but you know what I mean. We will be having the first impulsive move down, the first wave of the impulsive move down to complete the fourth wave here. So yeah, something like that. Now let's count the third wave. The third wave will be somewhere around here. So this is for the third wave, and the fourth wave will be somewhere around 382 to 618, somewhere around here. Yep. And the fifth wave, so it's a little bit different how to calculate the fifth wave. I'm calculating the fifth wave from the first, from this is the x, this is the z. So from the x wave here to the z wave here, not like that, something like this. From the y wave here, we have the x here, and this is the z. So our target for the fifth wave might be somewhere around here. With that being said, it will be completed the first sub microwave of the first wave. It's somewhere around 21,500, and 782 will be the ideal target for the second wave, the correction to the second wave. Yeah. And what is the third wave? This is the fifth. Oh no, I'm sorry, it's wrong. It's not like this, it's not like this. This is still far, I think. It's not like this, is it? Is it like that, or it's not like that? I don't really know. Let's just calculate it later and see the movement for the price. Yeah, it's 88. It still doesn't change. I think the target still doesn't change. It's just the placement that a little bit changed. So assuming that this is a valid calculation, I'm going to calculate the third wave, the second wave, and the third wave, and the fourth wave, and the fifth wave later, after we have more data for the chart here. So yeah, that's my first what you call it, bearish. That's my first bear case scenario. I'm going to put that back again here. Okay, now what we have, yeah, but still I'm missing this line here. I don't know how to calculate it. I'm assuming that this is a valid correction, and A there, and a B there, and a C here. So this is supposed to be an X, or let's just use a minuscule impulsive move down from this to this. I can assume this is the first one, the second one, the third one, the fifth one, and the fourth one. It's actually valid, and count it, minuscule wave, something like this. So this placement around here, and this is around here for the second wave, the third wave somewhere around here, and the fourth wave somewhere around here, and the fifth wave is here. And we also have another parallel channel for this bear case scenario, that we can watch this very closely from the body here to this body here. No, from this height, of course, from this height here to the body of each candle here. This is a descending parallel channel. Yeah, if you see the movement like this in the market, it means a really impulsive move down, because the parallel channel makes it so clear that the price will drop. At least if it's able to break this parallel channel, we can still edit like this. So if it if it actually break it, we can still move it like this. So, so it depends. But from this parallel channel here, what I see is the price move down. So something like that. That might be that will be able to play, if you know what I mean. So yeah, we already calculated how far we will able to go up, around 24 or 4K from 382. Remember, this is the target area of the second wave for the bear case scenario. From 382 Fibonacci retracement to 618, and yeah, okay, we have an impulse. Let's call it oh my goodness, what you call it in English again? A minuscule one. Can I call it as a minuscule one? This is a maybe a 5 minuscule impulsive move to the upside from the 15 or 5 minute time frame. But this is the first minuscule wave. So yeah, without being said, I'm able to say that this is the first impulsive wave. So want to set up here with the two and with the B wave here ending the one to set up, market the second wave of this one to set up. So we have a 2 here and complete the B wave here, something like that. Is it okay to assuming like it? Whatever. Okay, so this is my setup for the bear case scenario. Now we might be heading to this second wave, but by looking for this from this price movement, I think that the bull case scenario here still have more percentage to play rather than this bear case scenario. Yeah, we still have a big hope for this ABC correction, and then the price will reverse. So let's just draw another rectangle here for the target of this bull case scenario. Let me let me calculate it again. So this is the target. The target will be from 0.382 Fibonacci retracement to 0.618 Fibonacci retracement. So somewhere, okay. Yep, this is the target for this bull case scenario or whatever. My god, if I just been drinking. So let's put it here and lock it. Okay, so with this being my setup for the bull case scenario, we are now in our direction to complete the third microwave here. Inside this third microwave, we will be having a sub micro and impulsive move up. So assuming that this is the first wave here, from the fourth wave completed around here, we have the second wave here with a WXY correction and a 1-2 set up here, 1-2 and another 1-2, because this make a higher high. So this is a 1-2, another 1-2 set up, and from this 1-2 set up I can assume that we are going to the third wave, the fourth wave, and the fifth wave to complete the third wave of this micro impulsive wave. Yep, something like that. So I missed one count here. this one to set up mic. Oops, not this one, not this one, not this one. Oh yeah, this one. It's correct actually. Yeah. So this one to set up. Yeah, this is the one to set up. So let's just put this one to set up to the 4-hour time frame of this bull case scenario, and we have the two here, so let's type the 2 around here. So this will be our target for this bull case scenario. Let's put it in the 4-hour time frame. Yeah, lock it. Okay, so now we will just wait. But be very careful, since we will be having an FOMC this Thursday this week, so the price might, this market will have a high volatility coming to the market, whether it's going up or it's going down, but it's gonna be big, you know, so the price movement gonna be big, so just be careful. Assuming that the FOMC will be back for dollar, we will have a nice impulsive move to the upside and complete our target. But yeah, by looking for this chart, I can tell that there's something missing with this impulsive move up. We still have many waves to complete, so it's not going down. That's what I'm hoping. That's what I'm expecting. So yeah. Okay, everyone. If you like the update, so yeah, that's it for today. If you like the update, don't forget to hit that like button and consider to subscribe if you want to hear more from me. I'm going to update this daily. So, and if you have some thoughts about it, or if you think that the placement of the wave is not correct or it's wrong, just let me know in the comment below. And stay healthy, be happy, take care, bye bye.